Here is something that genuinely frustrates me. The UK government gives every single adult in the country the ability to grow their money completely tax-free. No tax on profits, no tax on your dividends, nothing. And the majority of people aren't using it. In fact, according to HMRC data, millions of ISA accounts are opened every year and just left sitting in cash, doing almost nothing. I'm going to break down exactly what a stocks and shares ISA is, why it's one of the most powerful tools available to UK investors, and how you can open one today, even if you have never invested a penny in your life. Let's get into it. What is an ISA? ISA stands for Individual Savings Account. Now, I know it sounds incredibly boring, but stay with me, because what it actually does is really powerful. Think of an ISA like a special tax-free box. Anything you put inside that box, any money you make, any profits you earn, any dividends you receive, HMRC cannot touch it. It's completely shielded from tax. Now, there are a few types of ISAs. Most people have heard of cash ISA. That's basically a savings account inside the ISA wrapper. But a stocks and shares ISA is different. Instead of just sitting in cash earning a bit of interest, your money is invested in things like shares, funds and bonds, with the potential to grow significantly over time. That's the key difference. A cash ISA protects the money you save. A stocks and shares ISA protects the money you grow. Why does the tax protection matter? Let me show you exactly why this matters, because without understanding the tax side, you might not appreciate how valuable it is actually. Outside of an ISA, if you make a profit selling investments, you could be liable for capital gains tax. Your current capital gains tax for this year is £3,000, which means you only get a £3,000 allowance before capital gains tax kicks in. That's it. Anything above that, the taxman takes a cut. Currently, it's 18% if you are a basic rate taxpayer or 24% if you are a higher rate taxpayer. Then there are dividends. When companies pay out a share of their profits to investors, that's called a dividend. Outside of an ISA, your tax-free dividend allowance is just £500. That's been slashed from £2,000 just a couple of years ago. So if you are investing outside of an ISA, you could be racking up a tax bill without even realizing it. Inside a stocks and shares ISA, none of that applies. Zero capital gains tax, zero dividend tax, and crucially, when you take your money out, you don't pay a penny of income tax on it either. You don't even need to declare it on a tax return. That is a genuinely enormous advantage, especially over the long term. Now, let's cover the rules, because there are a few rules you need to know before you jump in. Rule number 1, the annual allowance. Each tax year, which runs from 6th April to 5th April, you can put in up to £20,000 into an ISA. That's your limit, and this £20,000 can go entirely into a stocks and shares ISA if you want. This allowance is confirmed to be frozen at $20,000 all the way to 2030. So that figure isn't changing anytime soon. Rule number 2. Use it or lose it. This is important. Whatever you don't use of your $20,000 allowance by 5th of April each year, it's gone. It doesn't roll over into the next tax year. So if you only put in $5,000 this year, you can't carry over the remaining £15,000 forward. Each new tax year, you start fresh. Rule number 3. You can use multiple providers. This is something a lot of people don't realize, and it's changed in April 2024. You can now open and contribute to more than one stocks and shares ISA in the same tax year with different providers, as long as your total contribution across all these ISAs don't exceed £20,000. The old rule that said you could only use one provider per year is gone. So you have got flexibility to shop around. The only exception to this is the lifetime ISA. That's still limited to one per tax year. Rule number 4. Who can open one? You need to be 18 or over and a UK tax resident for tax purposes. That's it. And one more thing, if you withdraw money from a standard stocks and shares ISA, that portion of your allowance is gone for the year. So if you put in £10,000 and then you take out £5,000, you can't top it back up to $10,000 unless you are with a provider that offers what's called a flexible ISA, which allows you to put withdrawn money back in during the same tax year. Not all providers offer this, so it's worth checking before you open an account. So what can you actually hold inside a stocks and shares ISA? Quite a lot actually. You can invest in individual company shares, so things like Apple, Barclays, Tesla. You can invest in index funds, which pools money from loads of investors to buy a wide variety of assets. You can invest in ETFs, exchange traded funds, which tracks indexes like S&P 500 or FTSE All World. And you can also hold bonds and investment trusts. Now, if you are a complete beginner, my honest recommendation is to keep it simple. Rather than trying to pick individual stocks, which is genuinely difficult even for professionals, consider starting with global index funds or global ETFs. These give you instant diversification across thousands of companies worldwide at a low cost. I will be doing a dedicated video on exactly which funds to look at, so make sure you're subscribed so you don't miss that. Alright, the bit you have been waiting for, how to actually open one. Step 1. Choose a platform. There are several good options in the UK. Vanguard is popular for beginners because it's low cost and straightforward, which is where I started out. But it offers Vanguard's own funds. InvestEngine is excellent if you want ETFs specifically and has very competitive fees. Hargreaves Lansdown gives you the widest range of investments but tend to have higher fees. The right platform for you depends on what you want to invest in and how much you are putting in. Do your research, compare the fee structure and pick the one that suits you. Step 2. Create an account. Head to your chosen platform, website or app and sign up. You will need to provide some basic information and verify your identity, usually a passport or driver's license. This is standard. It's an FCA regulated process. Step 3. Open your ISA. Once your account is set up, select the stocks and shares ISA option. This takes a few clicks. Step 4. Deposit money. Transfer in from your bank account. You can start small. Some platforms let you begin from as little as £1. Others have a minimum 25 or £100. You don't need a lump sum. A regular monthly contribution, even £25 or £50 a month, is perfectly legitimate way to start. Step 5. Actually invest it. And this is the one people get wrong. Just because money is sitting in your ISA doesn't mean it's invested. You need to actually choose what to buy. Pick your fund or ETF, place the order, and your money is now working for you inside the tax-free wrapper. That whole process genuinely about 15 to 20 minutes. There is no reason to put it off. Before I wrap up, here are some of the most common mistakes beginners make so you don't have to learn the hard way. Mistake 1. Leaving your money in cash inside the ISA without investing it. This is the most common one. People open the account, transfer the money in, then wonder why it's not growing. Your money needs to be invested to grow. Mistake 2. Missing the April 5th deadline. Your allowance resets every tax year. If you have money sitting around that you need to put into your ISA, don't let the deadline sneak up on you. Once it's gone, it's gone. Mistake 3. Panic selling when the market drops. Markets go up and down. That is normal. If you invest in diversified fund and the market falls 15%, that is not a signal to sell. It's part of the process. The people who get hurt are the ones who sell low and miss the recovery. Stay the course. Mistake 4. Thinking you need a lot of money to start. You don't. The point of starting is to start. £25 a month invested consistently over 20 or 30 years can compound into something genuinely significant. So there you have it. A stocks and shares ISA is a tax-free investment account available to every adult. You can put up to £20,000 in each tax year. Invest it across funds, shares and ETFs and pay zero tax on any profits, dividends or withdrawals. There is genuinely no better starting point to UK investors. If you found this video useful, please do give it a like. It genuinely helps get this content in front of more people who needs it. Subscribe if you haven't already. Thanks for watching and I will see you in the next one.